Hello and welcome to an episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. So Don, basically, you're a bear-tard pussy who fumbled generational wealth on Dogecoin again. Any corrections before we get rolling?
No, I mean, that's just accurate.
Perfect. We'll get to the altcoins, of course, but happy BTC all-time high. Hopefully for real this time, because I'm tired of these scam all-time high breakouts. Just like send it already. That would be nice. It's funny, last week we talked about how like previous all-time high, well, recent all-time high breaks have been kind of scammy. Like the one in 2021, very slightly. The recent one in March that broke the 2021 high was scammy. So after two like distinct all-time high scams, don't you think that's enough and it's time to break out from this like 6-7 month consolidation?
It's actually kind of crazy, right? Like we're trading like 2% higher than we were before Trump got president, and Trump announced that he would buy a bunch of like Bitcoin as the president of the United States. Like that's insane, right? Like the curse is real, and I actually don't think I don't think it's gonna get much better. I made this argument yesterday when I had Casual Wednesday or whatever it's called, normal Wednesday, I guess, which was on Thursday. Which was on Thursday. I think Bitcoin is just trading more and more like gold, basically. And if you look at gold, that's done kind of shitty all-time high breakouts for the last decades, it feels like. And we're kind of doing the same, which is, I don't think it's necessarily the end of the world, right? Like just maturing as an asset, but obviously the breakouts of old were so much more fun when you had a breakout and then you were up 40% the next day. Like that's so much more fun than having a breakout and you're up 1% and everyone's euphoric already. Like it's a bit different now than it used to be.
Yeah, you kind of need to adjust for market cap, essentially, it feels like.
Yeah.
And have different expectations for what that looks like. I think like a lot of traders and investors are still indexing based on, 2017 20K market cap breakout. That type of stuff, and or even earlier versions, and they just extrapolate the percentages and go from there. I don't think that's necessarily the best model, but still, in terms of just purely from a technical perspective, a breakout from a 6-7 month consolidation, whatever upside there is on BTC just helps the whole crypto market. So I think it's just a natural byproduct of markets as a whole that as the the big orange coin gets larger in market cap, you can't expect it to have the same multiples, but you will be able to find those same multiples in the longer tail of the crypto market, like meme coins and proper shit coins and that type of stuff. So it's still there. I just think it kind of moves away from BTC itself. And I also think that's like normal and not bearish, if that makes sense.
Yeah. I mean, at the end of the day, you basically have very little risk in Bitcoin nowadays. Like just straight up, your risk of Bitcoin going to zero is almost zero. It used to not be. Like there was multiple times in crypto history where I think Bitcoin could have been killed, right? Like if the US really tried, or just generally, like if there was any political will, or just by the wrong people dumping at the wrong time, or like just people not buying, could have killed Bitcoin like multiple times during its time. Now that that's gone, right, you have way less risk, but obviously like every time you have less risk, you also have less upside. Like that's kind of like it correlates with each other, right? Like however much risk you take, like if the risk is high, there's probably more upside to be had, and if the risk is low, there's less upside. Sometimes you get situations where there's little risk and quite a bit of upside, and I think we've had that in the last couple of years. But at this point, I totally agree with you that we're kind of in a state of the market where it's kind of like, I mean, little upside in Bitcoin, but you have very little risk, and then you have the altcoins where you have a lot of risk because there's almost a guarantee that they're going to go to zero. But because there's so much risk and because they're so much smaller, you also have the upside to kind of balance that out.
I think the good thing is that the idea of sort of more limited upside needs to be qualified. That's for us by crypto native standards and by previous cycle standards, right? But the cool thing is the ETFs, if you look at the IBIT chart, for example, it just looks amazing, right? Because they don't have all the previous shit in it. And by boomer standards, if they make what we call low reward or a conservative return or whatever, for them that's going to make their entire portfolio, even in like a half-assed BTC cycle, right? So we essentially again maybe get to create a perpetual motion machine where, you know, the boomer TradFi ETFs just bid up BTC and they're super comfortable with their returns, which by their standards are really high, but by crypto native standards aren't super sexy. And while they're lifting the market on the BTC front, we go to the long tail of AI coins, meme coins, cult coins, shit coins, DeFi renaissance, whatever, and make our money there, and everyone wins. I mean, that sounds pretty convenient.
I mean, everyone wins until it stops.
Until someone sells.
Yeah, I mean, the music stops at some point. Like, that's the funny part, right? And this is kind of like how the altcoins work. Like, the music stopped at some point, and then everyone's just fucked. But up to that point, everyone wins, which is, I mean, that's just how crypto is, right? That's why people call it a Ponzi. And I mean, oftentimes I struggle to kind of
for God's sake
disagree.
Okay, so it's like gold, but it's also a Ponzi.
Yeah, but I mean, at the end of the day, like, what isn't a Ponzi, right? When you look at things, like the financial markets generally like Ponzi-like structures in a lot of them, right? Like, if it's not a security, is it a Ponzi? I think you can make that argument quite convincingly, right? Like, if you don't have anything, like a lot of the stocks out there too, right? Like, if they don't pay you dividends, like, and there's nothing that actually comes out of the thing, it's just the stock market. Like, it's technically just an altcoin too, right? Like, it has nothing, like the price of that stock has nothing to do with the real world in a sense. So like that argument, like, yes, we have a lot of Ponzi's, but you can look elsewhere and you're gonna find like stuff that doesn't really make much sense too. It's just stuff is not a Ponzi unless people kind of realize it's a Ponzi, and then it becomes a Ponzi all of a sudden.
It's like the wave. What is it? The observer effect in physics.
Yeah.
Once it starts being observed, it starts to behave differently. It feels like
the wave particle.
Yeah, exactly. But yes, again, very like it just feels like the market is super split insofar as reasonably everyone is cheerleading BTC, as they should, because that's a prerequisite for alts to do like really, really well, and for the, you know, longer tail to start getting slammed. But at the same time, I don't think the average like crypto native participant holds much BTC, and is certainly not overweight BTC. The common pattern tends to be like, okay, BTC looks good, so I'm just gonna add leverage, and adding leverage to BTC essentially means buying altcoins. And again, I think that can keep working as long as there is still a BTC buyer, right? Even if it's not the crypto native people. I think we run into problems if that logic is applied without a BTC buyer. Like, hey, this thing looks decent. The entire market and all the inflows pile into shitcoins, and then BTC starts to look weak. I think that historically is a pretty bad and bearish signal. But as long as the real world, the boomers, are willing to bid up BTC, then, you know, as long as that boat is being lifted and there's a rising tide, we can sort of get away with the classic, oh, BTC looks good, let me go buy something else. That works until it doesn't, but I think it's been the prevailing theme throughout a lot of this uptrend. I just feel, you know, we talked about it last week, the idea that BTC ETF buyers have like bailed out a lot of crypto native froth. And I think that's true. I truly believe that. And so if it continues now with a better regulatory landscape, better price action, etc., then, I mean, thank you very much, right?
Yeah, it's quite funny. Like, every single cycle, the crypto space finds a way to reward really dumb behavior. like this time it's the ETF basically bailing everyone out, and you've seen a lot of really dumb kind of like just generally dumb behavior being rewarded a lot. And I think, like you said, it's because of the ETF bailing people out. Last cycle you had like the whole fraud thing going on, right?
Yes. Like fraud-based credit cycle, basically.
Exactly, yeah. And then the cycle before, you just had like infinite people coming in, bailing the people out that were already in, right? Like that was like the 2017-18 cycle, where crypto was like went from basically not being known to mainstream in one cycle. I think that was 2017-18. Like, everyone at least heard of crypto after that, right? And like every single cycle, we find a way to reward dumb behavior and extreme risk taking. This time, I think it is the ETF people just buying, making sure that the crypto people aren't losing too much money. That said, like, the crypto natives, the only place that they've really won this cycle is in Bitcoin and in memes, right? And the memes are like very PvP. I think like there's more people that actually lost money on memes, but like those have been the only two good markets in crypto besides maybe Sol. I think Sol's probably the biggest one where crypto natives actually just straight up won. But the altcoins as a whole, because we always say altcoins, right? But the altcoins as a whole just haven't really done so well. Litecoin's still at $70. I remember how I sold Litecoin at 100 something at the beginning of the cycle. Like I bought it at like I think like 60, sold it at 100, and it's trading now at 70, and Bitcoin is up more than twice, like from where it was back then. So for example, like these old coins, these like the forgotten ones basically, and even the ones of last cycle like AVAX and like a bunch of other stuff, they've basically not really participated in any of it. It's just been Bitcoin, it's been memes, and it's been Solana.
Yeah, it's like the barbell portfolio meme. You're either with the boomers and you've been riding the ETF wave, or you acknowledge that there's going to be that rising tide, and then you position in strength, which has been memes pretty much all year. I think at least that part is relatively trader friendly. It's not like we've had 4 massive rotations the entire way up, and if you mistimed any of them, you got completely fucked. It's pretty much been the same theme consistently throughout the entire year. Obviously, what makes it difficult is stomaching that volatility, and also depends on your definition of memes, right? Because if you're positioned in the wrong memes, then on a risk-adjusted sort of returns basis, or the profile of that type of portfolio is absolutely miserable. But if you view it like sectorally, then if you correctly identified BTC plus memes as the barbell portfolio, which has been the case for quite a while now, you haven't had to do too much in terms of sectors, at least. Now, within the sector, if you picked wrong, I mean, God help you, right? You've had to rebalance like 10 million times. That's a problem. A lot of the memes that were strong early on are massively lagging behind now. So the intra-sector rotations are pretty punishing, but the inter-sector rotations have been basically non-existent. There's a bit of a mixed bag. Like if you locked into the memes, you're good, but if you avoided memes and thought, oh well, everything else is going to catch up, and I'm holding blue chips from 2021 and shit like that, you've just gotten fucked,
Yeah.
And the crypto native version of that is up until very recently just being mega overweight ETH the entire time.
But I'm gonna make a call and say that that's gonna change a little bit now that we're gonna get Trump. I generally, and I mean, this will be no surprise to anyone listening. Like you remember, like how you made made fun of me for the ETH bull posting last week. I think that's coming like back now that we're gonna get Trump, because with Trump as a president, right? Like I said this yesterday, and I mean it's very true. Like he rugged me on an NFT, right? He like basically rugged me on an NFT. The guy is gonna do stuff that the previous admin would call illegal in crypto. Like I'm almost certain of it. And I think it's gonna be largely like DeFi stuff that he would touch, like the NFTs, DeFi, like that's palatable. I don't think like a sitting US president is gonna necessarily do memes. He might actually launch a meme coin, but that's not gonna be good for memes as a whole. If anything, that's gonna be good for his meme coin. But just generally, I think he's going to be much more lenient, and whoever he's going to pick basically is going to be much more lenient on crypto as a whole. And if you remember back, like in 2021 and just generally afterwards, the problem that DeFi had was regulation, right? Like it was regulation. It was kind of them getting sued left and right. And I think that's not going to happen in the next 4 years, or if it's going to happen, just much less severe. And I think that's going to basically lead to a bunch of people doing stuff that they wouldn't have dared otherwise, which I think is going to be like a general sector rotation where people are just going to go from useless shit, which is memes, right? But it's good to trade, to things that they deem useful, like that you can actually sell to a broader populace. And I think that would be like DeFi stuff. So I think DeFi is probably a good bet going into Trump. Whether that's going to be on Sol, ETH, or whatever, I don't necessarily want to say. I would go with ETH personally, but that's just personal preference. But I think the DeFi stuff is going to get much more interesting. And I think that's honestly, like for crypto, that's a good thing. Like the more security-like crypto products become, the more useful they are at the end of the day. But people didn't want to go to jail. That's why they didn't run that playbook. The meme guys, they did illegal stuff anyway. I didn't really care. So I don't think that's going to change too much under Trump. They're just going to do the same thing, right? Like it's not like there was any fear of anything really on the meme sector. People were just doing wild stuff, breaking laws, didn't really give a shit. So I think that sector is going to stay the same, but I think the DeFi sector is going to change just based on that development, and I think that would be bullish for DeFi.
Do you feel like this might be a mid-curve type of argument? Because essentially it requires that the strongest sector stops being the strongest sector, right? And I mean, it's like quite a big rotation implicit in that argument. Is there a risk that you sort of just basically, the strong stuff keeps being strong, and this is just sort of cope to mid-wit rotate into something that's been performing all year?
I mean, I could see memes still being the strongest sector, but I think DeFi is going to pick up a lot. And for people that don't really, like, for example, me, I'm not really interested in the memes too much, right? Like the one thing that you can interest me in on the meme front is Dogecoin, right? And that's a stretch already. Like I have trouble holding that for too long. Whereas on the DeFi side of things, like that's much more interesting to me. Like if there's actually going to be something useful in crypto, fuck yeah, I want to be on board. There's very little, in my eyes, useful things in crypto. And if you then get something that's actually quite cool, that actually interests me, that actually works, I'd much rather be in that sector. And I think a lot of people, like a lot of money that's been around for longer, feels the same way, right? And there's much more space in the DeFi sector to invest and to just kind of like put a bunch of money in than there's in the meme sector, I think. So I think basically it's just you have Bitcoin, very, very like not risky at all. And then you have like stuff like ETH and DeFi at that point, which is risky. Don't get me wrong, like it's risky, but not nearly as risky as the meme. So you just go out, right? Like the further out towards memes you go, the more risk you have, the more returns you can get. But I think DeFi is going to be a nice middle ground where you can actually just like play stuff that is interesting, and then just avoid trading dog shit. And I think that'd be nice. Like that could get me interested again in actually actively trading something, because the one thing I'm tired of is just trading dog shit all the time. Like that's just not fun. Like at some point you want to have something that's actually cool, and that could be DeFi. So I'm excited for that.
Okay, so strength relative to itself, at least, even if it doesn't necessarily eclipse meme coins.
Yeah, I mean, generally, I think basically strength in relationship or like related to like basically all the other altcoins. And then some memes might still outperform, but I think it would actually, in my eyes, it's a very obvious bet. It's basically like Bitcoin before the ETF, right? You remember the discussions we had where we were both like, hey, Bitcoin's getting an ETF, like this is such an obvious thing, right? Like why the fuck would you bet against that? And I think now that Trump is coming with DeFi, I think you basically have the same situation. As long as the market stays up, and that's a big if.
Why is that a big if, Tom? God damn it.
I mean, because it's always a big if. Like, I mean, look at the fucking world right now. Like, it's fucking wild. Like, you have war in Europe. You're gonna get war. Like Israel, Iran. You're probably gonna get like escalation there.
We're about to get Germany, UK if you keep bear tarding. I swear to God.
I mean, I'm not bear tarding right now. No.
Okay,
I'm just saying like there's a lot of risk factors now that we used to not have, and I think that's probably in the next few years gonna continue, like just geopolitical stress. China and the US, I think, is gonna get much worse, the relationships there. Not necessarily because of Trump. It's always funny, like people were like saying like, hey, Trump sucks so much with the tariffs and like that he put in against China on his first on his first presidency, right? Where the Democrats were like, hey, like this is such a dumb move. And then Biden came into power and he kept all of it, right? So I don't think that's because of Trump necessarily, like something that he's going to do, but just generally how the world is set up right now. China is kind of trying to be a world leader. America, like the US, is one. I think there's going to be like a bunch of geopolitical stress. So you always have to kind of be like, hey, I'm bull-tarding here, but you always have to be nimble because a shitload of geopolitical stuff can come up. I think it's just the world we live in right now. Like everything sends, and then something stupid happens somewhere in the world, and then everything nukes, and then it sends again. This is how it is. So like as long as the general market stays up, I think DeFi is going to be a really good bet in the next 4 years. And even if the market nukes, I think it's going to be a better place than most other things to be in.
Yeah, well, crime is legal now, basically, in crypto. So
yeah, so
you
DeFi,
launch
like
those tokens, turn on the fee switch, Don.
Yeah, you saw what they could do with a little bit of crime. Like, yes. I mean, obviously, a lot of crime when you like just crypto specific, right? But now you can do like non-crypto specific.
I mean, crime is bullish because fraud is a type of crime, and fraud facilitates credit bubbles, and credit bubbles facilitate price going up very aggressively.
I think basically we're setting up for something like that again.
I fucking love it.
I mean, it's just how crypto does. Like, and we talked about this last cycle, right? With when Luna did the batshit insane move to kind of back itself with like Bitcoin, and we were like, but what if Bitcoin goes down, right? You remember that? Like the whole discussion we had?
Yeah,
and
it feels like we're taking crazy pills at the time.
yeah, and we were like, yeah, how does this make any sense? Like back then, and people were like, nah, dude, Luna's just going up infinitely.
Well, what was
like,
funny is we lived that in BitMEX. Like the story of yes. BitMEX is people being long Bitcoin / crypto using Bitcoin as collateral. Like we all know how that ends. You know, this wasn't. It's not like there wasn't a sample size for that.
Yeah, and that's exactly my argument. Like we managed to do this every cycle. And people are always like, this has to be the last time. Like Luna implosion has to be the last time. And then there's like a million other like times where we've had this exact scenario before, where we've managed to kind of like lever to the tits the entire cycle. Sailor is kind of like on a low risk basis doing the same thing, right? But he's doing it smart. He's staying kind of low leverage to an extent. But basically Sailor style, just someone else that does it like that gets a little bit more greedy. And I think that's almost guaranteed to happen. It's just how crypto functions, right? People want this thing to happen. Yes. Like everyone is excited
before that, obviously.
Yeah, I mean, the funny part is like you don't want to sell before it. You want to sell while
before the
fraud
blow
is
up
happening.
Yeah, of course.
Yes, like you wanna have all the price appreciation of the fraud, but you want to get out before the fraud kind of gets exposed for fraud.
Yes.
And I think that's basically gonna be the next 4 years.
Like I said, the Tether example in many cases, right? You had people being like, "Oh, well, Tether's manipulating the BTC prices upwards." I mean, they were blatantly wrong. But if you really believe that, then I mean, your first action, at least as a trader, should be to buy that shit, shouldn't it? And, like,
yeah,
align yourself with the fraudulent, price-insensitive buyer who's having real market impact, and sort of ride the coattails. That seems way more appropriate.
Yeah, I mean, that's the way to go. You see fraud, you join in. I mean, it sucks like from a human perspective, right? You see something that you think really shouldn't be happening, and you're like, your human instinct is like, this is fucked up, but your trader instinct has to be like, hey, how long is this gonna go for? Because those are legit like the biggest opportunities price-wise that you can have. It's just obviously not a good thing. Generally, I think fraud and all that stuff obviously is not a good thing, but for a trader, it kind of is like, because. And this is why crypto has been such a good market to trade, because you've had so much fraud and so much like illegal shit happening, pump and dumps, whatever. Because basically what it means is that something that is inherently kind of decent, which is crypto, gets pumped up like 10x to the valuation that it should be. And then you can sell as a trader, and then it nukes 90% because it kind of just goes back to where it would have been, and then overcorrects even sometimes, even lower than that 90%. And then you have the opportunity to buy something like 90% discount, 80% discounted, right? So you have the 10x to the upside that goes much further than it really realistically should. And then you also have the downside where it goes much lower than it should because fraud blew up, which was 16K, for example, last cycle. Like it really shouldn't have gone there again, but we had so much fraud that blew up that we kind of managed to. And then you have both sides, like both extremes. the only people that really lose are the ones that are attracted whenever the fraud is at its peak, right? Those are the ones that get really fucked, and that's been retail every single time. It's why I think retail's not really come in this cycle. Like, you don't really, or at least it's very quiet in comparison to previous cycles, because retail's come in 2017, got fucked, and then they came in 2021 and got fucked, and now they're just kind of like, hey, we're not gonna fall for this shit again. But
they will.
I mean, if Trump keeps pushing this, right, which, I mean, it seems like he will, they're gonna have to.
I mean, price is also the best advertiser for these things, isn't it? Like,
yeah,
you know, no matter how hard you may have been burned in the past, it's very hard to get over the impulse of greed. And if things go quickly enough and high enough, and, you know, people around you who haven't been burned previously are starting to make money, you kind of just fold at some point and give in against your better senses. TA, Don, don't know if you've heard of that thing.
Oh, we do that
before.
too on the show, yeah.
Sometimes, yeah, when it's not philosophical sophistry and other bullshit. So let's say someone hasn't been following this chop for the last 7 months. And I think that's actually a pretty decent frame of mind to have periodically. Like, if you've been following the market very closely, you might have some biases baked into it, and you might just view things as a participant who's been sort of chopped up for the last 6-7 months. So sometimes I think, at least weekly, it's nice to just delete all of your lines, all of your levels, and just take a fresh look from the high time frames and kind of re-anchor and realign yourself with what's going on. I think that's generally a useful exercise. And in this instance, someone came to you and said, look, you know, I know some basic TA stuff, whatever, haven't been following crypto stuff for a while. This looks pretty sick. You know, they'll say that BTC was ranging for 6-7 months and has now made a new all-time high. They'll look on the weekly and make a similar argument that, you know, since September, you know, August, September, has just been making higher highs and higher lows in the context of a 6-7 month consolidation. And now it's breaking out. You know, same with the daily time frame. You could draw like a really big range if you wanted to, and now it's breaking out again with it's not just a breakout from a range, it's a breakout from a 6-7 month range. So ordinarily, at least in TA terms, you would argue, you know, the longer consolidation, the longer the expansion, as a rough rule of thumb. And so in this case, it just looks like clear skies, technically, in a better regulatory environment, so on and so forth. So, you know, they're like, Don, you've been here since 2017, etc., etc. This is my technical view. Why shouldn't I be all in at the moment? Now, obviously, the all in part is hyperbolic, but do you agree with that baseline assessment?
Yeah, I mean, you obviously never should be like, if you have to ask me, right? Like, if you can't make up your own mind, you come to me and you have to ask. You really shouldn't be all in anything, right? First off, like, don't, like, if you have no idea what the fuck you're doing, don't just put all your eggs in one basket. I think makes a lot of sense. But that said, like, it does look really good. Like, if you're on the monthly time frame right now, like, when you have these kind of big consolidations that break to the upside, and it kind of looks like it is currently. Obviously, the monthly closes in 22 days, so that's a long time away. But it doesn't really make much sense. I had a bunch of people yesterday ask me, like, hey, what if this is a false breakout? And I'm like, dude, this went up like 1 or 2% since Trump got elected. And it's kind of broken out. And you really shouldn't assume it's a false breakout. And we repeat this over and over and over again, but people just really want to fake breakouts. Like, just don't assume it's a false breakout until it's actually a false breakout, right? Like, it doesn't really pay you to be like, hey, I'm the first one that spotted this false breakout. And now I shorted 76K. Instead of like 71K, when it's actually like a confirmed false breakout. I think that's just like a relative simple exercise to not get fucked over by like high time frame breakouts. Just don't assume something's false until it's actually false. And you're gonna have plenty of time to be bearish if it's actually a false breakout. Just look back on 2021, right? Where if you're on the monthly time frame, we had the 58K close in April and March, April, and then it nuked. It came back up, made a higher close, technically started breaking out, and then it didn't, and closed back down below it. And that's where I was like, okay, this really shouldn't have happened. I'm gonna be on the defensive now. which is like 10K from the all-time high, right? And you could be like, oh, like 10K is so much, but in relative terms, it's nothing. And if it would have broken out and went up like 20, 30K, I would have hated to kind of miss that back then. And I think the same is kind of true for where we are right now. So basically, assume it's true. This is breaking out. Be bullish. If it doesn't, like if this month doesn't close above like the prior high, which is 72K, I think we could be in the same situation that we were in 2021. I see very little reason for that to be the case. Like with Trump pumping crypto and all that kind of stuff, like it just seems a little bit far-fetched to kind of assume that we're going to do the same thing again. But like if that happens, I would kind of have to assume so, because we would retrace the entire Trump pump. That's great, actually, Trump pump. I love it.
Yeah, that's good.
But so basically, you don't want to see that. But unless that happens, I mean, I'm just gonna be like, be bullish until it's proven otherwise. And for me right now, what I could see happen, because the breakout is very weak, right? I think you agree with this, right? Like the breakout, you would have assumed that it goes up more on a Trump presidency. I don't know how you think about it.
Yeah, I don't know. I think it's weird. I think there's a lot of churn at the moment, because a large part of those positions were essentially pricing in a Trump win. So there's understanding.
Oh, I had so many people argue with me on this, because I made a tweet like 2 days before and was like, the reason why it's like just chopping and not going so well is because people are pricing in Trump win. And therefore, like if it goes up, it's gonna go up less than you would otherwise think. And people are arguing me about this.
Interesting. Like, no, I don't think that's an insane thing to say. That's not the same as saying the entire thing is Trump win and now it's sell the news and it's fucking over, right?
No.
It's just a partial explanation for some of the flows we're seeing.
Yeah,
I think it's completely grounded in reality.
Like I think just a bunch of crypto natives, like, and this is true, right? Like 80% of crypto thought Trump was gonna win, right? And they were all positioned for it. And then like now it's gone up and a bunch of people are taking profit. Doesn't mean it has to go back down. It's just to explain why it's sluggish. Because
yes, I mean the non-crypto native marginal buyers are going to be slower than the crypto native buyers who are positioned for this already. That seems, I don't know, it doesn't seem insane to me. Is my position there? Okay,
good, because I was feeling like I was taking crazy pills, because I had like 3 or 4 like bigger accounts subtweeted me with the tweet being like, Don's lost it. But crypto, like Bitcoin's up 2%, 3% since the prior high before Trump got elected. Where I'm like, you would have, like any other time, you would have expected at least a 10%.
Oh yeah, if it went priced in, you'd expect a larger magnitude effect, because
exactly,
yeah, by definition.
I'm not saying like, hey, this doesn't go up because like everyone bought. I'm just saying like the move was so much smaller than it should have been. Okay, like at least. Like sometimes I'm like wondering, am I just not?
No, I mean that seems reasonable. It's just some post-news churn, you know.
Yeah.
And it takes a while for some of the other non-crypto native allocators and technical traders and stuff and funds, etc., who want a pro-crypto, a good regulatory environment mandate to start raising and aping in, etc. It's just a bit, and even with the ETF people, right?
Yeah, it's the same story, right? Like.
Yes.
Also with the ETF, like we had a bunch of front running, and I think that's where the last 7 months of chop have come from, right? Like just all that front running had to be absorbed, because people are just like, okay, and I front ran this at 30K, now it's at 70K. Maybe I don't want to have that risk anymore. Then you have the front run selling, you have new people that buy the ETF buying, and then you have that kind of choppy range that we got. I think like that just makes a lot of sense.
Yeah, I think that's reasonable, but if both of us think something's reasonable, maybe it's completely batshit insane. So with regard to the monthly all-time high, whatever, I remember your call at 58K or around there. Is it the kind of thing that generates a equally sized bearish signal if it doesn't work, or is it like at the moment strong bullish signal, and then if it fails, it's like weak to moderate bearish signal? Do you think it's both extremes? Like this looks really good, but if it doesn't, then it looks really bad. Like how do those? Is there a symmetry between those two?
Yeah, I think it would look really, really bad. Like below 70K, like if you go back below 70K, even though we had this good news and all this kind of shit, I think it would short term look really, really bad. And then I would expect, like, I think at that point I would expect the complete leverage unwinding basically, and that could easily take us below 60K again. I'm not expecting this, just for the record. Like I'm not in the camp like, hey, we're gonna go below 70K and then we're gonna go to like 58 or whatever again. But I think it would be a really, like, that's just a really bad signal. And I think at that point a lot of people would be trapped on the wrong side. The good news is that now that we have like a US president that is very bullish crypto, I think 58 might actually hold again, like the monthly level. Like if that happened, and that's a big if. So like even if it happens, I think the unwind would kind of happen from 70 to 60, and then it would start getting interesting again, which is, I think, good news for anyone like being nervous about like this being a false breakout or whatever. But I'm not expecting it. I generally, for me right now, when I look at the monthly time frame, it kind of looks very similar to what we got in from 2019, August 2019, that high, to September 2020, where we got the breakout and nothing happened, and then we got an immediate retest. So like basically we are currently on the breakout. I could see this go towards like 80K ish, and then actually retest the prior high without actually failing it. I could see that happen, and then just going up. It's a similar kind of price action, similar kind of structure when you look at it, right? That's more likely to me than just straight up failing it. As in basically go up now, get a little bit of froth in, go back down to nuke that froth, and then actually just run. But right now, I'm just assuming this is a breakout, and that is probably going to go up.
Do you still hold the... Yeah, okay, so from a technical perspective, all the stuff mentioned previously, like, you know, breakout from a long consolidation, yada, yada, all that stuff is bullish and positive. And you at least have a short to medium term invalidation of sub 70K, which means in the short term you should be worried, but at the moment it looks really good. And I think another thing worth mentioning is that we're not that far away from it, you know? There's like one daily candle that basically lifted us through that level. So if you're trying to set up like aggressive momentum continuation trades or swing trades or something of that ilk to realize that idea, it's not the kind of thing where your invalidation is 50% away and the whole thing just reeks, right? We're still, the proximity to invalidation for a breakout of this magnitude and relative to a consolidation of this magnitude is still pretty good, you know? And again, you're never going to have it perfectly, because if the breakout is if the breakout is weak, Jesus, if the breakout is weak, then the signal itself starts to get messy. And if the breakout is really, really, really strong, then your original invalidation is less helpful because it's so far away. So it's almost like you're looking for some sort of Goldilocks zone where it's a strong breakout, but not so far that the original invalidation is just useless, you know? And I think we're kind of in that area, you know? Especially because you've got like I mean, literally, I think if you use that daily swing low before the pump at like 66K, if you're being a bit more conservative, as your portfolio invalidation, if that makes sense, which isn't to say you nuke everything with the market order below there, but it just means like, hey, this failed, then it's too early for a breakout. I don't think that's the worst idea in the world. Yeah. And you can even move it up to the thrust candle low of that daily, which is at 69K.
Yeah, that's
and just
say,
look, above here, like, holy shit, fucking send it. And then if it starts really slowing down or grinding through those levels, you'll at least get a chance to reposition. And, you know, there are many ways to do that. For example, let's say this shit teleports right now, then it's not that far from your invalidation, which is good. If it doesn't teleport right now, then I doubt it just means crypto is bearish or whatever, just like full stop, it's fucked. But you'll probably get a big washout on some of the outperforming altcoins that are worth trading for a bounce, you know, all sorts of shit. So the TLDR there is basically all the technical stuff we spoke about previously, you know, long consolidation, breakout, all-time high, etc. It's currently all green lights, which is good. So I think some at least aggressive exposure, if you trade that type of style, is warranted. But I think, again, if you're managing this on slightly lower time frames and you want to trade around it, then 70K is a good short-term invalidation in case we get fucking all stitched up by a all-time high break that doesn't come.
Yeah, dude, this would suck so bad.
No, fuck that, like, dude. I'm so tired. Like, I'm so tired of this consolidation. I'm so tired of all-time highs providing fucking, you know, generational resistance levels. Just stop the shit. We've suffered enough, and at least a bit of upside, you know, would be fucking just give us a break, basically. Yeah. Do you still hold the view that even if I mean, let's say this entire section is dog shit and it just keeps fucking teleporting, right? Do you still hold the view that it's going to be a weak all-time high breakout before it gets nuked back down, even if it ultimately resolves in a support test, yada yada yada.
Yeah.
Is that still your base case, that acceleration isn't to 100k plus, but rather like, I don't know, mid 80s or something?
Yeah, I mean, like mid 80s. I mean, it's still a big breakout. I think like 80, 90, 80, 90, 100k is all possible, but I would all like title all of that a weak breakout. Yeah, anything below like 120k is a weak breakout to me right now. So like I would still think that. Yeah, I think you're gonna get a bunch of froth in. Like if we go to 80, I think between 80 and 90k, you're gonna get infinite froth basically. Just immediately, snap of a finger, everyone suddenly leverage should hits expecting 100k, and I think that would basically get washed out pretty much immediately. So like if we, that's kind of been my case, like my base case. Like we talked about this for weeks and weeks now, right? Where I was like, I think like this probably goes up, but I think it's going to be a weak breakout. And I still pretty much exactly expect that. I generally also like just looking at the daily chart, like it has already been a weak breakout. And we talked about why and all that stuff, but at the end of the day, it's a weak breakout.
But it hasn't been that long either, right? Like I think if it lasts for a week under 80k, I'd be like, this is a bit shit, but I'm willing to give it a chance to.
Oh yeah, I mean, I'm giving it a chance. Like I'm like my base case is bullish from here.
Yes.
And if it goes to 80 and 90k, like my base case has been like, hey, it's gonna go up and then it's gonna like basically get stuff. But I can change my mind at 80, 90k, right? And I can be like, hey, this is actually much stronger here than I thought it would be.
Yeah, Coinbase is like buying the shit out of it. All coins are flat. Yeah. There's no froth. ETFs are ramping up. Whatever.
So it depends on how we get there. I basically look at the market when I make these predictions, right? I look at the market. I'm like, okay, this would just get like very frothy, but it doesn't have to, right? Like it's not a guaranteed that that's how it's gonna play out.
Yes,
it's just what I'm expecting it to do. And then I like if we are there and it's at the price level that I expected it to get to, which is 80, 90k, but it's not trading how I thought it would, then obviously I'm gonna change my tune.
Yeah, you kind of reality check yourself, which is a very good thing to do. I think in terms of practical stuff, what would make sense to me is the following. If you, I mean, this is a big fucking move, right? Like there's a chance that this is the breakout from a multi-month consolidation. You expect it to go up for weeks and months afterwards, right? And I actually think the decision tree here is very similar to, at least in some respects, feel free to disagree completely, the 30 to 35k breakout, where you have like a mega level under which the market was cooking for a while, and then it suddenly starts to impulse through it. I think realistically, a useful decision tree there is, if you want some exposure, then your options are to either just fucking market buy some spot so that you don't lose your absolute ass looking at 1 to 2% moves, and then it goes up 30, right?
Yeah.
And then you feel like an absolute idiot because you're like, what the fuck was I doing? This is like one of the clearest high time frame signals ever, and I was wrestling over like a 2, 3, 4, 5% bet entry, even though the move ended up being 20, 30%. Like that's a really shitty feeling, and I think every trader's been there. You and I have certainly been there. But I think if you want to like sanity check yourself and hedge against suicidal ideations, then you just put on some essentially price insensitive exposure, right? Whether that means for you spot, whether that means low leverage, whatever combination of those two, but you like have something so you don't fucking lose your mind if it teleports up. I think the other option, if you want to be more, if you don't suffer from those mental demons and want to have some exposure nonetheless, is that you put on your trader hat and say, look, normally low time frame entries have low time frame targets, high time frame entries have high time frame targets, right? But in this instance, given how the high time frames look, if I get a low time frame long entry, I'm going to hold it through the low time frame first trouble area resistance and just keep that position on. Right?
Yeah.
So it's like basically a slightly more advanced version of, fuck it, I'm just going to buy some at market and hold it because I want exposure. This is like the slightly more risky but also technically sophisticated version where you're like, I still want to like trade my way into an entry, but I will give sort of respect to the high time frame picture by not cutting it on a fucking 2-3% move in my favor. I think both of those are acceptable and make sense, or are a good mental illness hedge. That if this shit is like new paradigm, full regime change, teleportation, you don't feel like an absolute cunt. I don't know what you think of that framework.
No, perfect,
but it's just, that's what makes sense to me. And then look, if it pulls back, if it fails or whatever, I think you can justify not feeling like an absolute asshole, right? No. Like when we were trading around 30k plus, You know, if you're buying that and if it were to pull back and fail and get back into the range, I wouldn't have felt bad about that trade. I'd been like, hey, you know, like it's about as good as you can expect the high time frames to look. That's not a trade you look back on with regret. You don't feel like an asshole. I feel like this is one of those similar instances. If you're a bit price insensitive or take a more loose approach with your entry, and even if you're wrong, I don't think you should feel like an asshole. And that's a pretty good trade criterion for crypto at the very least.
So, I think 3 out of 4 times that just works.
Yes.
And if this is the time where it doesn't work, I mean, so be it, right? Like,
I mean,
it's not like
a lot of friends as well, you know? Like, if this doesn't work, there'll be a lot of people in the same boat who are thinking, what the fuck is going on?
But that's why I'm saying, like, if it doesn't work, be quick.
Yes,
because if it doesn't work, like, all of those friends that you have turn into your worst enemies, like, very, very fast, because they're basically gonna want to try to get out of the position too. Like, I generally, and this is why I'm like saying, like, hey, like, be bullish unless you start losing this impulse, because if you do, I think it's basically gonna be a bunch of people coping because they're like guaranteed Trump is gonna make this go up, and they have positions that are underwater, and those kind of people you can punish the easiest, right? Because they will not give up until they're kind of liquidated ish. Therefore, I think you would get like a large leverage wipeout, and I think it would end up going up anyway, right? Like that's kind of where I'm at. If this goes wrong, it's basically to get rid of a lot of baggage, like a bunch of people that are like rightfully positioned, but with too much risk. And so I think it's gonna go up, and that's the other way that this can play out. It's gonna wipe out like all that risk side of things and then go up. So I mean, if you're in spot, you're probably just fine either way. Like panicking is just not the way to go.
Yes.
But my base case is just generally like it's probably just gonna go up. Like it's gonna cost a lot of money to make this go down. Like something would have to, I think it would have to take the S&P down. And like at this point, like back in the day, right? If someone saw like positions like this, like where the market is kind of like overextended, whatever, and someone in crypto was like, okay, I can take advantage of this, just starts dumping like millions of Bitcoin,
just stab the perps, basically, yeah.
Yeah, and then suddenly everything rolls over, and it's just like a Bitcoin / like crypto move because someone just saw an opportunity. I think you cannot really do that anymore. You need
not in BTC at least, no, not to the same extent. I guess on really low time frames it's possible. Like we've seen, you know, Binance Bear Whale, Hyperliquid, whatever squeeze, those types of things. But yeah, on a high time frame, like the higher the time frame, the harder that is to do.
Yeah, because basically, like I mean, you're gonna sell, and then the ETFs are just gonna sit there and start doubling it up, and then you have to pray that it cascades before they've actually just bought up all your shit and the price goes higher. And it's like, that's not a nice position to be in, right? So like the market has changed in that regard where like it's not as easy to take advantage of market participants anymore.
Yes.
But it's still like, you can still get that, right? Like if the S&P starts going down, the ETF gets a little bit less hungry because of it. And then the breakout fails, you can still get that wipeout. Yeah. But my base case is just up.
Yeah, I just felt the need to add some meat to the bone of like, okay, I've just listened to like fucking 30, 40 minutes. And these guys are saying, yeah, it looks good. Let's fucking go. Base case is up. But like, what the fuck do I actually do?
Yeah.
And I think we provide at least some semblance of a useful framework, which is you can either just fucking give in and mental illness hedge yourself and just buy some spot. Don't care. Don't try to, you know, be intelligent or trade your way into an entry. Or if you really want to be, you know, a bit more precise, then you look for any low time frame long entry that meets your criteria. And the big difference there is you hold it through your usual low time frame target. There we go. Yeah. I think that's about as practically useful as it gets.
Yeah. And your invalidation is 10% away right now.
Yeah, which isn't crazy. It can be a lot worse.
Yes.
And again, that's the benefit. It has been a lot worse. And that's the benefit of doing the low time frame approach. And again, it's always trade-offs, right? Like if you take the price insensitive approach, you're guaranteed an entry, but your invalidation is probably going to be worse. Whereas if you're taking the I'm going to trade my way into an entry approach, you're not guaranteed an entry, but if you get one, your invalidation is probably going to be tighter and you know, more palatable to you as the trader.
Yeah.
And generally speaking, for both camps, at least from a high time frame point of view, that early warning system is like sub 70, 69k essentially, which is the breakout candle getting stuffed. Is that it? I think that's pretty comprehensive.
Is it, yeah.
ETH.
Dude,
Ethereum.
The ETH Cope triangle, dude.
I mean, you've called the last eight of the last 2 ETH bottoms, Don. So this is your fucking track record is impressive. ETH BTC. Let's start there.
Oh yeah, still boring. People are euphoric about it.
Right.
And I mean, I get it. It's the first green candle we've had ever. But like, I mean, it bounced. Like, if you go on the monthly, it bounced exactly on the line that we drew like months and months ago. Basically, the consolidation high of January.
0355, yeah.
Yeah. We talked about this like for ages and ages. It went there. I actually like. Last week even I was like it's technically at high time frame support, and the comments on the YouTube video were actually like Don has to have such a huge ETH bag because he's coping so much. I mean, look at me now. It's up, it's green.
I called it.
But just generally like it bounced where it needed to. It's still in between like support and resistance. Resistance is at 0.039 ish. But it's still kind of boring, right? Like, it's not like this is a crazy candle or anything. But it's at least something, right? Like, it's 3 days of upside. And yesterday was quite aggressive upside. And that is while Bitcoin is going up, right? Like, that's a big difference, because what we've been seeing is that like ETH holds a little bit better. And then that's a green candle on the ETH chart while Bitcoin goes down. And that's generally like probably just like someone forgot like a buy order or something. On ETH USD, and Bitcoin goes down, and then ETH holds up better, but then retraces all of it anyway. In this case, it's actually just more buying on ETH while Bitcoin goes up, which is good, right? Like, that's what you want to see. So that's the first good sign, but I think ETH BTC still looks meh. The interesting chart is the ETH USD chart.
Let's talk about ETH USD then, because that is on a similar cusp of a breakout.
Yeah, let me see. I mean, technically, like on the low time frames, it broke out of it broke out of the triangle already. If you go to the weekly, it is exactly at the 3K prior resistance, whatever.
Okay, so are you full short this broken support turn resistance baby pips pattern, Don?
No, like it reminds me too much of 6K? Bitcoin at 32K or like 6K as well. Yeah, basically. You run into the most important level, but if you wanted to stop this, you would have stopped it at 2.7, not at that level. But I could be wrong on that. Kind of same story as Bitcoin. If it falls back below 2.7K, I think it's kind of cooked. Starts looking really bad. But until it does so, just looks really good on the USD pair.
Okay. Yeah, I mean, the levels here are, for a change, very good on ETH. Like, I'm looking at it on the daily, basically 2.9, 2.7.
Yep.
I think the trades that are available are breakout trading, 3K plus, and then you at least have a clear invalidation at 3K, and you pray that it just keeps steamrolling and fills in that gap left by that super sloppy selling. Or if you get shallow pullbacks and or shallow pullbacks up to 2.7, you basically have, again, a case of good proximity invalidation, and you're hoping the whole thing isn't a fucking failed breakout scam. I think the cool thing in both instances is that, again, as boring as it sounds, this is like very important trading stuff. Your proximity invalidation is pretty good in both instances. They're just different trades showing it. Like the 3K breakout trade, you have good proximity invalidation, even if you have to chase it up a little bit. And you've got a pretty good magnet higher in the form of that, volume profile gap. And the 2.7K trade also, or close to 2.7, has a very clear line in the sand and proximity invalidation, because if that fails, then it probably means BTC has failed, and it's a failed breakout. A lot of people are going to be trapped, so on, so and so forth, as the story goes. So that I think is pretty good. I think that means at the moment it's kind of a nothing burger, because there might be some, it's like it's into resistance, not above it. And sometimes those 2, 3, 5% make all the difference for the actual expected value of the trade. Like, I think that's worth waiting for, personally. Either 3K plus, even if it's... Like, I'd rather buy, 3.2, 3.3 than 2.9, if that makes sense. That sounds absolutely retarded. but I stand by it contextually in this context, Like, I'd rather pay a premium, at least in this case, to buy above resistance with a clear invalidation rather than buy resistance with no clear invalidation for a better price.
And I mean, it's the best. Like,
your mileage may vary though.
Yeah, but I mean, if this was Bitcoin, like, I would be like, hey, just ignore this resistance at 3K and just run it through. Like that's what I said at 32K, if you remember. That's what I said. That's what you and I said. Like at 6K, like we've always made this argument, right? For Bitcoin, like if you get to these high time frame levels of resistance, previous consolidations, whatever, if you get there, you usually break through, right? For altcoins, it's not necessarily the same. So this is ETH. So I kind of agree with you. Like above, like at 3.3, like I mean I think just generally, like I've been saying, like I think ETH's gonna do well, but I think it's gonna do much better than it is right now above 3.2, 3.3, because I think it's just gonna make a new all-time high at that point. Like if you reclaim this current resistance, there's a good path towards like 5K, and then it doesn't really matter too much.
That's
like
spicy. I mean, why don't we go full tinfoil hat TA and have a range? We like those from 4K to 3K. Even
I
the
mean
midpoint
that's literally what I have on my chart. Yeah,
I mean even the midpoint takes you to 3.5K and the range high takes to 4K. Obviously,
yeah.
So then, again, this is a clear case of where you consider the size of the available move relative to how precise you're trying to be with your entry. Like it seems like, oh, I don't want to buy 3.1 to whatever 3 even, because it seems like a bad deal. But considering where the next trouble areas are and how the whole structure shifts, it's not a terrible premium to pay. Like if I tell you have to pay 2% extra for 20% more upside, you'd be like, yeah, of course I'll do it. But if I tell you have to pay 2% premium for like 1.5% more upside, you'll probably be a bit more skeptical, right?
Yeah.
So like I think that's a relevant trading consideration. And in general, this just gives you, I think, if this is your ETH roadmap, I think it's rock solid. You essentially have 3K as the former range low, big inflection point. You've got 3.5 as the midpoint, choppy piece of shit trouble area. You've got 4K as the range high. 2.7 as this better fucking hold, otherwise we've been scammed. And then your actual religious level of support is the fucking ascending triangle trend line, which, fifth test, best test on that one.
Yeah.
But like I legit think you can just keep the ETH chart and it'll guide you somewhat helpfully.
Yeah. I mean, if it comes back, we're all fucked. If it doesn't, I generally think, especially with what I said about DeFi.
Yes.
I think if this narrative gets rolling, and I think it would above 3K, you're in the exact right spot. I think the ETH charts, and a lot of them were bullish ETH the entire way down, and then turned into accounts that just kind of like nonstop posted, haha, ETH sucks so much, right? Like it's kind of funny to see that whole thing play out where people were like, it's Bitcoin and ETH, and then ETH went down like infinite against Bitcoin during this cycle, and the last few weeks have been nonstop, like people just being like, hey, ETH is a piece of trash, never goes up, whatever. Yeah. And then it actually starts going up.
Friends long ETH, that type of stuff.
Yeah, that whole meme.
Kind of not late. I mean, you are late to that, relative, at least from a time perspective, right?
Yeah, so late. When it's like when it's an old meme on CT, you're so fucking late.
Should have watched Casual Friday, the home of ETH is in a downtrend.
Yeah.
And the home of the midwit trade. That was a very compelling thesis.
And I don't think it's a midwit trade anymore.
Okay, there you go. ETH has graduated, guys. Congratulations. You even got Don to fucking realign. But yeah, this is, I think, a super helpful. It's the only ETH roadmap that people are going to understand. Because God forbid you try to understand the actual ETH roadmap, you are absolutely fucked. But this one, I think, is intelligible.
Oh, Jesus Christ.
No fucking proto dank sharding in this one. just like 4 lines.
Yeah, but so we're kind of on like ETH has a setup, at least for the first time in a long time. Like get above 3K. Like I mean, I said the same thing at 2.7, right? I was like get above 2.7, and it starts looking really good. Now it's above 2.7, and I think we really shouldn't get below that. Above 3K acceleration. Like a weekly close above 3K would do quite a lot to this chart.
Oh, for sure. Yes.
And I mean, then you can make the argument that it's exactly the same as Bitcoin below 6K, right? Like it's also a similar structure when you just like zoom in a little bit. It's very similar. Like in ascending triangle, like that's literally what Bitcoin did, right? If you remember, like go on Bitcoin on the weekly and then just compare the two, right? Like you had a long consolidation. that broke down. You have an ascending triangle at the bottom. I fucking hate that the pattern idiots get it right.
I know,
on this
I know. We have to throw them some crumbs from time to time, you know?
Yeah, but basically, same kind of story. We are currently at the 6K resistance, basically. And if ETH is not a piece of shit, which to be fair, it has been, so maybe it continues to be. But if it's not a piece of shit, I think you can make that analogy, and then I think like ETH can go back to 4K at least.
There you go. Quite reasonable and very technically clear at the very least.
Yeah.
And I think this is one of those helpful ones as well, where the weekly time frame just basically entirely mirrors the daily. So if you want the slower but higher probability signal, it's like weekly close above 2.9 or whatever, or 3K. And then the weekly range is like slightly different if you take highest close, lowest close, where the midpoint is slightly lower at 3.4, but it's like still the same shit. Like the range high is 3.8, 3.9, so on and so forth. Like that's a really like clear chart. It's very hard to get. I mean, you can always get faked out by signals that don't work, but again, this is one of those areas where if you get it wrong and you followed the closes or followed the setups, you shouldn't feel like a cunt if you're wrong. And those setups are pretty rare to find in crypto. So there we go. We've redrawn the ETH roadmap. Solana. Basically,
Solana's above 200.
Yes,
yeah.
Sol is above 200. What do you think? Are you breakout buying this thing? Is it a similar decision tree when it comes to Sol? Where are the levels, so on and so forth?
I mean, I'm personally not breakout trading this at all. Like, if anything, I'd be breakout trading ETH. But that's just because I'm a boomer. I don't really care about Sol too much. But chart wise, it's good. Yeah, like I'm not a Sol hater. I'm not like, because people kind of title me this way. They're like, hey, like you always hate Sol. It's just like, no, I don't really care. Is all it is. But chart looks good. Yeah, like above 200, I think there's all the opportunity in the world to accelerate. We are here for the third time in a row.
For sure.
So like 200 is the resistance, but with kind of like starting to go. And if you go on the monthly time frame, that's actually been really clean.
It has.
And actually been more clean than Bitcoin even. Bitcoin had like that lower washout. Solana did not. So retested monthly support went up. Generally don't really see a good reason for this resistance to hold again. Same kind of setup. Like if you want to trade Sol rather than like Bitcoin or ETH or whatever, it's the same setup basically. Like ETH has a little bit more of a clear setup because it broke out of that ascending triangle. That's a little bit closer to invalidation. But Solana, like the invalidation is 160, right? Like that, like this weekly impulse, if that goes, like I think then you're probably gonna see like much lower prices.
What about 186 on the daily? I was kind of eyeing that up earlier because it's kind of the top of the shorter range that was formed in this massive consolidation. And we kind of had a bit of a hiccup there and then broke out. Do you like
it? Kind of works. It's very aggressive though. Like in comparison to the levels that we have on Bitcoin and ETH,
that's true.
I think that's very aggressive. But then again, like given the strength, like it has a lot of, like Sol has a lot of strength. It's not the end of the world, right? Like when stuff is weak, like I don't like to go for the aggressive levels like this. But if it's strong, oftentimes those are the only ones you get, right?
Yeah.
So I think like 186 is a decent one. Like if you absolutely want to trade Solana, like that can be your invalidation. It's just very aggressive. Like that would usually be the one where you look for a pullback, right? But in this case, given everything's breaking out, you'd be like, hey, okay, like it really shouldn't have come this far.
Sure.
So yeah, it's a little bit more aggressive, but I think just generally like Solana looks good.
So the boomer version is the, sorry, just very before we move on, the boomer version is the weekly impulse low, right?
Yeah, basically 160 something.
Pretty straightforward. And again, it seems like so far away, and in this case, obviously it is a bit more far away, but the whole premise here is that this thing's been consolidating for like 18 years. And it's like the cycle narrative leader, and it's on the cusp of a breakout from that long consolidation into a new all-time high. So the corresponding size of the target, so to speak, kind of compensates again for the relatively wide invalidation.
Yeah,
and I think
targeting
that's why
400. Like for example, targeting 400 is not that crazy on that chart. Like that's very close by.
And I think this is what gets, I mean, I'm speaking from experience here, and I'm sure you've been affected by this as well. It's very easy to get tied up when there's like, you're used to trading lower time frames with more precision. And then you kind of have to eat humble pie if you really want a piece of the high time frame cake. This fucking terrible analogy. But you know what I mean, right? Like you're so used to being like 1, 2, 3, 4% invalidations. And now it's like, hey, the target is like fucking invisible, and if you really want a piece of this, then you need a wide invalidation. It kind of hurts your trader ego because you're so used to doing business so close to invalidation and for it to be so technical, and you get all the perfect retest, and here you're being essentially asked to like ape on lower time frames with a wide stop. Part of it just kind of feels foreign and alien, and it's a hurt to your ego that you're not like fucking sniping this thing. But sometimes with high time frame setups, that's just the cost of doing business. Essentially, it's like a necessary condition to participate in like a very, very strong breakout or a very strong market.
Yeah, it's basically when you go from trending, where you need to be really precise, from ranging, where you need to be like very precise, to trending, where you really cannot be precise, right? Like
if you're precise, you're wrong.
Yeah, I mean, like legit, like oftentimes when you have these breakouts and you're precise and you buy the retest, that was a false breakout and you just bought the top and you're getting wrecked. So like, that's why this is like so important. And like you said, you're kind of rewarded by having far away targets. So you get the same kind of mileage out of the trade, even if your stop loss and your position size is like, if your like position size is smaller because your stop loss is so much further away. What people do otherwise, like usually when like they usually don't adjust their position size, they just put the stop loss and then they're just like, okay, I'm going to take 50% of my portfolio is going to be gone if this is wrong, which fair enough. But
same size, wider stop. Yeah, what could go
wrong? But yeah, that's kind of the situation we're in right now, I think, where you have to adjust from, okay, we've been ranging for months to we're technically breaking out, because what you don't want to happen is that like that nasty wick that you sometimes get on breakouts to the downside that washes people out to take you out too.
Yeah, I think.
And the problem.
Sorry, go on.
Yeah, the problem is that like you could be smart and be like, usually like oftentimes there's a nasty wick, so I'm gonna just bid that, and it doesn't come, and you just never get an entry, and it just runs away from you, and you just completely lose your mind. So
yeah, and what a terrible trade-off, right? It's like I want an N% better entry, whatever size of the wick, but if you don't get it, you miss out on like a 40, 50, 60% move. You know?
Yeah.
We could even come up with like a very short list of, I guess, the key differences. Sort of key differences, trending versus ranging. So I think time is a big one. So trending equals faster resolution, V reversal. Time frame, trending equals more lower time frame / faster moving averages / shallower pullbacks. I think another useful one is, hold on, let me try to sort this out properly. It's not opening anymore. There we go, almost there. What do you think is that? What else is relevant? Time is an important one. So trending is faster resolution and V reversal, and obviously for ranging, you just take the opposite of this, right? Time frame, trending equals more low time frame, faster moving averages that you use, and shallower pullbacks. Maybe there's one in terms of sort of sizing, right? Or precision. That's what I was looking for. That's one this game. But precision, generally speaking, trending equals less precise and levels are less clear. Do you agree with that?
Yeah.
So when you're range bound, you have the luxury of trading really good levels because the market really isn't moving anywhere, and those are worth waiting for. Whereas, as you remember, certainly in 2021 and previous ranging trending environments, you see like one red candle on the 4 hour, and it's like, oh my god, this is like the best fucking support level on the planet.
Yep.
You know? Yeah, so we've got time frame, precision. I know there's a video on this channel, by the way, somewhere titled like how to trade altcoins in a trending market, where I've got like a more thorough list. But while we're both here, is there anything else that comes to mind? Time frame, precision.
Actually, not really. No.
That's quite a lot of it.
Yeah.
How do you think of it in terms of sizing?
I mean, it depends, right? Like, it depends on how strict you are with your trading. But technically speaking, in trending environments, you want to have as much size as possible, but also your stop loss so far away that you have to go a little bit smaller.
Yes.
So it depends basically. Like you want to keep the size that you have on. Like you want to keep the positions as long as possible, basically in training environments. But technically speaking, when you put the position on, it's hard to put it on or like you really technically shouldn't put it on as big as you usually would.
Yes.
So.
Yeah. I think it's also generally more dynamic, right? Where you don't want to have, as the trend goes on for longer, you don't want to keep increasing your position size, generally speaking. In a real trading environment, you want to let the market do the heavy lifting for you, and it's that initial impulse that you want to be well positioned for, I think.
Yeah.
And that also, I think, speaks to the next point, which is trade frequency. That's one that we should probably discuss. Trade frequency, I think trending is... God, this is difficult, but I would posit that in a trending environment, you have a lower frequency of trades.
Yes.
And that's simply because, for two reasons. One is that if you're correctly positioned in a trending environment, then the market does all the heavy lifting for you in terms of trading, and you should just have those core positions and already be positioned for the move. And again, the market does the lifting for you. And the second thing is that a lower trading frequency will also prevent you from over-rotating. And just like rebalancing
making
all the
mistakes.
time. Yeah, making mistakes basically, and that's like the biggest killer. You have like what you're trading this type of market. One day your positions are sort of relatively weak compared to another sector. You fucking rotate everything to that sector, and the next day your original positions are up. Like that type of. It's very easy to just miss out on an entire trend or underperform or even bleed your account due to fees if you're always hopping back and forth. So I'd say, generally speaking, in a trending environment, you have a lower frequency. I think another one is trade management, which kind of relates to trade frequency, but I would say that lower frequency trade management in a trending environment and more of a trailing stop updated invalidation approach, because in a ranging environment, you very liberally kind of get in and then cut, and you take a few stabs at that type of thing, and you just try to figure out the best entries to like catch one rotation. But realistically, if you're on the right side of a trending environment, your trade management shouldn't be that active. You're letting the trend do most of the heavy lifting, and as far as what you do manage, most of it is going to be, if things really start to run, just updating invalidations so you don't give back too much.
Yeah. And maybe take some profit along the way.
Yes, so that's another one. Here we go. See, the list is expanding, Don. Targets. I would say that in a trending environment, fewer predefined targets. Predefined targets / more aggressive trend monitoring for updated invalidation. So I think when you're trading, and again, feel free to disagree with any of this type of stuff, and obviously your mileage and approaches may vary for those listening, but generally speaking, in an environment that does, behaves in this way, you don't trade it like, the meme version of British CT. It's like level to level, etc., etc.
Level to level, matey.
Yeah. That's like not it for the most part. It's certainly not going to put you in a position where you're just holding these massive runners and these massive trends through some like irrational market caps. I think for the most part, it works for range trading because you don't expect things to break out or move a lot. So your previous highs, previous lows, all that type of stuff provides enough friction for you to get out of the trade, and the market is generally mean reverting. But in a trending environment, if you really want to create the possibility to hold this stuff through mental moves, the way you do that isn't by having preset or predefined like take profit levels per se or resistance levels, but you rather just, I think, change how aggressively you're monitoring the low time frame trend. And basically, as soon as that breaks and as soon as it nukes one of your updated invalidations, then you just get the fuck out and lock your gains in that way. And now the pros of that approach is it puts you in a position where you just get to ride crazy shit through crazy shit. So that's really nice. And the cons of that approach, obviously, is if you're bad at updating your invalidation, then you give back a lot. And also, if the trend is very steep and doesn't give you a reasonable place to update your invalidation, then again, you're at risk of giving back a lot. And also, if you're too tight with it, then there's a chance that you puke the whole position on what's ultimately a shallow pullback before it keeps going without you. But again, there's no perfect recipe here without trade-offs. I just think, on average, fewer predefined targets and more aggressive trend monitoring and updating validations is a better, kind of the trailing approach is better than, this is the resistance, let me just nuke my entire position here and that's it.
Yep. I mean, I generally think also like, but this is not really applicable to the differences. But when you have a trending environment that goes completely crazy and your life would be changed by just taking like 10, 15, 20% of your portfolio out of the market and into the real world, you'd be kind of an idiot not to do so.
Yes.
Like that's my advice for like, let's say this goes crazy here and goes like Bitcoin goes from 70 to 90K and you see a bunch of altcoins like 10x or whatever, like just do me the favor or do future you the favor and just take like 10, 15, 20% out. It's not going to make a difference in crypto terms. If it does another 10x, oh yeah, I mean, that's a bummer, right? Like you could have made more, but you're still going to be beyond rich at that point. Like if you're up that much already and then you take another 10x, that's great. But if it then goes down, you're not going to sit there regretting things or revenge trading, because that's what tends to happen, right? When people make a shitload of money, the market goes down, they tend to revenge trade to get back to their all-time high, and then they lose it all. I've seen it too many times. Just take that as like from me, as someone that's been like in the public CT space for so long. Because if you're just doing this by yourself, you don't see this as much, right? But like I see it like I saw it in 17, 18. I saw it during every single cycle where people made riches and then basically went out poorer than they came into the space. Just make sure that you're like somewhat insuring yourself against yourself, right? Because you're gonna do dumb shit when it goes crazy. Just make sure that you cannot do dumb shit that actually hurts you. And that is one of the easiest ways to do it. Just cash out like 10, 15, 20% when it gets crazy. And then if it gets even more crazy, do that again. It's not gonna change like you being generational rich at any point, like if it's just like 15, 20%, but it will change if you're actually just wrong on things and the market collapses.
And you put yourself into a way better mental state, I feel like, versus living your life on unrealized P&L, as we both have done, is just not, it fucks with you. And I think the issue is it fucks with you up until you then realize some, and then you feel that burden lifted and you experience how good it feels, and you feel like an idiot for not doing it earlier, if that makes sense. So it's hard to ascertain and experience in the moment, but as soon as you do it, it's that instant relief that is very worthwhile, and it'll give you a clearer mind in general to make subsequent trading decisions.
Yeah, I mean, at the end of the day, like if you look at it in a way where it's like your stop loss is complete financial ruin, right? And your target is like getting 10% more.
Yes.
Like that's fucking dumb,
that is
right?
a
Like
bad
that's
trade.
really fucking dumb. So like just look at it as a trade, right? You're like, hey, I'm giving up 15, 20% of this. Which at the end of the day is not that much, but like I'm raising my stop loss by infinite, right?
Yes.
So just look at it that way.
It's like my target is 10% away and my stop loss is financial ruin. It's like,
like how dumb is that? Like when you actually think about it. But then people are like, hey, this is for sure gonna 10x one more time, and like the 10% is gonna make like it's gonna be so much money, which is true, right? Like it's gonna be much money, but at the end of the day, it's still gonna only be 10% of what you would have made. Like if you, let's say you make $1 million, you make 900K, like that's not gonna make a big difference, right? Or if you make 10 million and you make 9 million instead, like that's not gonna make or break you. It's not gonna make it a big difference at the end of the day. But if you lose it all but you keep like 100K in that case, or like $1 million out of those 10, like that's much better. So take it from someone that's seen this too many times. And I've heard the sob stories, like literally the DMs that we have after the cycle's over, like nightmare stories. Some of
those 2021 DMs are some of the saddest things I've ever read, like full stop. Like especially the ones you shared and stuff. Like, oh my god, dude, wouldn't wish that on anyone. But hey, this is a pretty useful. I mean, look, it's a very rough on the fly framework, and maybe it warrants its own article. And again, there's another video on the channel that has a similar outline, essentially, as far as making adjustments for trending markets. But I don't think this is a terrible place to start. Although the most worrying thing about this is, if we're talking about this now, there's a risk that it's a top signal because Casual Friday is so cursed. You know, we spend the entire time fucking talking about all-time high breakout, how good it is, making adjustments, and then it just goes to zero. That'd be very on brand with Casual Friday curse.
Yeah, that'd be unfortunate.
But hey, if it goes to 60K, we get to FUD it again before it's the generational bottom again. So
yeah, no, this time we don't FUD it. We're like, oh shit, let's go, and then
and then I mean, it did break, right? Like,
it did break. We were right. It just took 6 tries.
It took 6 tries. But also, the wipeout on that break was actually pretty miserable. That was.
People were struggling.
The impact there was pretty bad. Cool, that's helpful. Any altcoin stuff you want to discuss? Like Dogecoin is challenging its previous high from March. You had a lot of Dogecoin. Now you do not.
Yeah.
Do you still think the thesis is in play?
Yeah. I mean, the thesis has not changed. Like, it's not like when I took profit, it's not like any of my ideas changed. I was just like, hey, I really just don't feel like trading right now. People kind of lose their minds when someone says this, but like that's how I want to live my life, right? I don't want to have my life dictated by the market or someone else. Like, that's the cool part about making your own fortune, right? Where you're like, I just don't feel like it. I don't have to do it. So nothing's changed really. I still think like there is, especially like, I mean, the whole Doge kind of idea was based on the fact that Trump may win. And then you have Elon pumping Doge again on a much bigger stage. And that's not like, that's, if anything, been confirmed now with Trump having won. I think Dogecoin is pretty much the best meme coin from like a risk to return ratio, where the risk is very little compared to every other meme coin. And the return is still quite good. I think $1 is possible, which would be a 5x. The risk is quite limited in a way that like this has some sort of lindiness to it. And it's also like just like a really big coin. So yeah, I still like Doge from a just technical and just kind of narrative perspective. So yeah, I'm not hating on Doge.
Good. So hey, maybe you should rewatch like the segment 10 minutes ago about getting an entry, Don, and you can update us all on your market buy.
Yeah, I mean, it's the same. Like, all of these entries basically would be the same, right?
Yes.
On all of these coins. It's just some ran harder and some ran less hard. And you might be inclined to look for the ones that ran less hard because it's easier. Like, you're like, oh yeah, this is just 2% away from invalidation. That's better. That's not necessarily the case, right? Like, the one that is 10% away from invalidation might be better than the one that is 2% away because it's already showing strength, right? Whereas the one that isn't. For example, Dogecoin, the invalidation right now, when you look at it like quite objectively, or even like on low time frames, I think that would be 0.15, and that's quite far away. Like, that's 20-30% away, and that's on a low time frame basis, right? And if you look on the weekly time frame on Dogecoin, your invalidation would be 0.1, which is like you take a 50% haircut. Which might be like where you're like, okay, I really don't want to do that. And this is why I think your advice, like, take low time frame entries and then hold them for high time frame targets. That's kind of the best thing to do in these.
That's like the only thing you can do, because you're not putting on a trade with a 50% stop unless you want to size it with like $2.
Yeah, exactly. And then what you can also always do is just, and this is what like just happens in trading environments, you just go on the lower time frames. And like on the weekly time frame, you're like 50% stop loss. That's way too far, and I 100% agree. Then you go on the daily time frame. You look whether this is, and this is something that you have to do, right? Whether this is kind of like ripe for a massive shakeout, because then you could actually get shaken out, right? Because that's the risk that you take when you go on the lower time frames, that time frame actually just shakes out. But if Dogecoin shakes out below 0.15, I think it's just wrong. Like, you're more likely wrong than that it's just a shakeout, because that's so deep and so against the current narrative that I think at that point it probably just go even lower than that. And then that's more reasonable. And then you can do this on the 4 hour too. You can be like, hey, the impulse candle from like 0.1, like on the 4 hour, 0.17. Right, like that really shouldn't be. And you can go like this, and then you have a decent entry, like with decent invalidation. That is actually like, you're not going to lose too much if you're wrong. It's not necessarily too likely that you get stopped out and the market fully reverses. like tags the level and then just goes back up. I think if we go back below 0.17, there's a good chance we shake out all the way to 0.14, for example, like if you go on the 4-hour time frame, which is just to say, like, I don't think that's going to happen, right? So you have a decent invalidation, and then you can target quite high because it's a high time frame breakout, it's a high time frame narrative, and then you can go from there. It's obviously not guaranteed, right? And there's always going to be times where your stop loss gets triggered and it just still goes to $1, but that's kind of the trade-off that you have to take when you take this strategy, where it's like 1 out of 3, 1 out of 4 times you just get completely wrecked and you're the bottom and you fucking hate it, but that's just the life that we're living as traders.
I think if there's anything managed to get across, hopefully, and convey somewhat convincingly, is that there's no free lunch. It's just a trade-offs against trade-offs, you know?
Always, yeah.
Whereas I think if you listen to a lot of like Twitter trading stuff, it's quite the opposite. It's like, oh, if you just wait for like this specific confirmation and candle pattern, then like it's risk-free, you know, move to break even is risk-free. Like you can't lose. Oh, just flip bias if your long gets invalidated, make it back on the short side. It's like all these methods are trying to, I mean, they're creating the false illusion that there are no trade-offs and you can always like offset the risk fully and actually still make money. And I think if anything, the opposite is true. It's more of a know your enemy, pick your poison type of thing, more so than just avoid all the risks and somehow get paid. It's just not how it works.
Yeah. When the market looks like there's no risk, you're taking maximum risk.
Yeah.
Like it's just how it is.
It's like those, super trend following stuff where it's like, oh, look, all the trend following indicators on like every single time frame are like max green, max bullish. It's like, hey, that's actually really risky, you know?
Yeah. I mean, that means it has run for ages.
Yeah, exactly.
You're up like 500%, and at some point it is going to have a shakeout or like just the top, and then you're going to get completely
You are
wrecked.
not early if that's the case.
Yeah.
Also, Mudeng is up 13%.
Yeah, I mean, Mudeng, like the whole, like, this is something to generally look out for when stuff gets listed on Binance then immediately kind of nukes. Like, if it's something that is like has a lot of mind share
and it survives basically
it basically survives that nuke, then you have really interesting trades. And I mean, Mudeng is up like 130% or something from the bottom, and you got like a pretty nice setup there, like at the bottom on Mudeng, like Mudeng USDT.
Yeah.
You had like a resistance there that got just broken, and you had like basically a breakout candle, and then it's never looked back.
Yeah, for sure.
And so there's something there on the lower time frames to trade with the background that it was listed on. Like, this wouldn't be interesting if it wasn't, right? Like, this, the only reason why this is interesting is because it was listed on Binance and then died.
I actually don't think it's a terrible approach for your altcoin watch list to be like, what are the lowest cap, newest meme coins listed on Binance, and trading those for your long tail, you know? I think there are like two ways to go. One is a way we keep talking about because it keeps working, which is depending on the time frame of your trades, you look at like daily or weekly strongest performers, and then you sort of anchor based on those and you generally expect strong stuff to keep being strong. Or you take the degen approach of like, look at the new listings, the absolute fucking newest shit coins listed on centralized exchange. There's going to be volatility there. But then if it survives that sort of listing insider exit, you're going to find some wild moves there as well.
Yep.
And then obviously option 3 is like more rotational narrative driven, which I also think is the hardest one. Like, I think it's way easier to just keep trying to buy stuff that's been strong rather than time the rotation perfectly. But there is a third option, which is that if you, for example, agree with you that there's like an ETH-centric renaissance, DeFi utility can now commit crimes, etc., then you're at that point just trying to be early to a narrative and hoping that there's a catch-up trade. I just think on average the early to a narrative catch-up trade is harder than strong stuff is going to keep being strong. But obviously there's also a risk premium built into that. So if you are right and you're there before the rotation, you make a lot of money, essentially.
Yeah. I mean, basically it's like you catch the first move and then hopefully the second one. Whereas like sometimes the first move is like a 5x and the second one is like another 5x. Like the second one is so much nicer to catch from a trading perspective because the first one's like just very risky. But if you manage to catch both, like that's a 20, like that's so much more, right? Like it's 25x instead of just like a 5x. But you also have to take massive risk, which usually I think, like you said, is not worth it in crypto. Usually you want to, like, a narrative takes hold and then it retraces a little bit, and then you jump on it, rather than you predict the narrative. Because a lot of people have been trying to predict the ETH resurgence for months now, and they got completely wrecked, right? Whereas if ETH just shows some strength here and then goes above 3K, you have a really easy trade, right? And it doesn't really matter that you didn't buy 2.1, 2.2, 2.3.
Yeah.
If ETH goes from, like, if you just get on board and then you immediately, like 2 weeks after, you can sell again for 2x the price, like that's so much more chill. But obviously the return is going to be a little bit lower. There's like ups and downsides to it. I tend to, like, if I see like a narrative that could possibly form that actually sounds reasonable, I usually try to front run the narrative. But most of the time you just cannot. Like, there's no real reasonable narrative for something, and then you just grab the narrative while it's hot, right?
I think ETH is the most pertinent example of what happens if you're wrong, essentially. That you try to front run something that doesn't happen, and you just end up massively underperforming, rather. So
it's the ETF flows, like we had that whole thing.
Yeah, exactly. Cool. I think that's pretty thorough, don't you think?
Yeah, WIF's been struggling. I made, like, people are so mad all the time, dude. Like, every time I make a joke about something, like, I'm like doing this, like, like, not even with like bad intent or anything. I'm just like making a joke. And the best thing for a meme is to stay in the limelight, right? The more people talk about it, the better for a meme it is. So if anything, the WIF people should be happy that I'm tweeting about it. But I was making a joke that, like, Doge, like that the dog doesn't need a hat, because Doge's been outperforming WIF quite massively. And I think just generally the big memes, like Doge has a little bit of like a liquidity draining effect on, like, for example, WIF right now. I think that's pretty clear. The Doge kind of like the Doge narrative is just because of Elon Musk, basically, is a strong one. And the WIF one is suffering because of it. But it's still at like 2.2k support, 2.2 support on the chart. Like on the daily chart, you have like a range low at 2.2-ish. So that's kind of retesting that. So like if we see a little bit of strength there, that'd be good. If not, like, starts looking quite bad, just technically speaking. So it needs to hold 2.2. If that fails, I could see it make like just meander downwards, and that will look quite bad. Reason why I wanted to update is because, I mean, I was bull talking it at 1.6, 1.7 on this show. It went up quite a bit, but now it's been underperforming, and I think like 2.2 is a good invalidation / like if you're really bullish with, that's a good entry, but it needs to hold.
Yeah, at least the levels are still very useful on this thing, right? Like, it got stuffed at the former high at 2.8. So like, on the TA, you're not gonna. This isn't the kind of chart that misleads you on the TA side, at least as much as or as frequently as others. There are a few other interesting ones, like Popcat had a very interesting failed trend line breakdown. I don't know if you were following that.
Oh yeah, I actually saw it on Twitter, but I haven't been following how it looks like. Oh yeah, strong.
That's not
strong
bad,
recovery,
right?
Yeah.
And in general, I think if there is a dominant trend, some of the best setups you're gonna have are those failed breakdowns.
Now, again,
I
saw a lot of people bidding that trend line actually before it failed.
Yeah, I saw that too. Guess that's why it failed. Haha. But no, like, again, this is the whole trade-off thing. Like, if you're aggressively trend following and you see a break, and you're up a shit ton, then you're gonna nuke your position. And sometimes you'll be right, and you get like an early exit signal, 10% down versus 40-50% down. But other times it's just a fake out in a strong trend, and then you have to buy back higher. So no free lunch. You know, if you're gonna aggressively trend follow, you need to be willing to both cut early, but also get back in if you're wrong. If you really want to milk, you know, the entire move.
Yeah, I mean, it gave you, like, you had that like diagonal, but it gave you quite a nice exit basically on, like, just like, it had a breakout above 1.5 something, like the prior high before the all-time high.
Yes.
And then it failed that, and that was quite a nice exit signal, short term. Like, if you like if you're aggressively trend following where your stop loss is just the last low, I think these kind of signals you cannot ignore. because that's so much better than the last low, right? If you took the last low and you had like that's your exit, you get pico bottoms, right?
Yes.
Like that's your exit is the pico bottom. Whereas like that breakout that failed, you could just rebuy now if you wanted to. And now that it has wiped all of those lows, you could actually put your invalidation back below that low. And then you
failed
kind of
breakdowns give you fresh invalidations by definition.
Yeah.
That's why those setups are so spicy, because you have a technical reason for it to revert, which is, you know, the failed move itself and the trap participation there and absorption, all the, you know, stuff that comes with it. But you also have a built-in validation because of the whole double fake outs are rare thing that we love talking about.
Yeah. So either you're not aggressive,
yes,
and then this wouldn't have taken you out because your invalidation technically would have been below 1 if you're not aggressive.
yes,
like just that impulse candle, that would have been your invalidation. Or you are aggressive, but then you have to take like false breakouts and stuff like that very seriously, because like that false breakout, like that's a decent signal and it's probably gonna take the low too. And then you can either, like if you want to be really aggressive, just re-enter on the low that gets wiped if you think something is really bullish, or just rebuy when it's showing the strength that you want, which would be technically now, and then you have a new invalidation at 1.12 at 1.2-ish right now.
Look at that, Don. Just trade-offs again.
Yeah. Fucking radical centrist.
Radical centrist.
There's always a trade-off, which I think that's just how the world works. There's nothing like there's just no black and white. It's not how it works. It's always like something in between, and there's always like trade-offs to what we're doing in life.
No free lunches on Casual Fridays.
No free lunches.
Let's wrap.
Yeah, let's do.
Cool.
You start.
Oh, okay. It's back to tradition, is it?
Yeah, please.
Well, yeah, that's all from us. Hopefully this is somewhat helpful. Let us know in the comments. Thank you to Woo for supporting the show. Somehow, Don, they're still here. Thank you to them. Make sure to click stuff so they don't ditch us completely. And we'll see you next week.
Bye-bye.